All participants are muted on entry. So let's begin. I'm Callie, the Marketing Product Strategist here at OUCU Financial. Thank you for tuning in on to our home buying seminar today on your lunch hour. We know that a strong foundation of financial education has a value beyond your bank account. OUCU is your dedicated financial wellness partner, and our mission is to help you. Buying a home is a huge deal. Today, our goal is to help you feel more confident during the process of buying your home. As the top mortgage lender in Athens County, the OUCU Home Loan Team are experts. Feel free to ask your questions today. Please hold your questions until the end. If you need to ask something, use the Everyone Chat option, and I'll be monitoring the chat throughout the presentation. For attending today, you'll receive $100 off closing costs. Our originators will have your names of all of the people attending and will guarantee that you get to take advantage of this promotion. Thank you, Home Loan Team, for offering this opportunity for our members. And this offer will be good till the end of the year. We'll be sending out a recording of this seminar to all who are registered here in a couple days. So I'll turn it over to Kim Simmons, our mortgage originator, um, serving or presenting this very informative and valuable home buying seminar for you today.
Hello, everyone. My name is Kim. I have been with OUCU now for almost 7 years, and I am the mortgage originator. So whenever you do purchase your home, I'll be the one that you'll be working with every step of the way with that purchase. So let's go ahead and get started here. All right, so welcome to OUCU Home Buying Seminar. We're so glad you've joined us on our lunch hour today. We're going to go over our objectives of the day. First, we'll be doing an overview of the mortgage process. We'll dive into what you might need to qualify for the loan, PMI or private mortgage insurance and what that means for your loan origination process, closing costs and what all these entail, and finally, the different loan types available for you here at OUCU. The first part is the mortgage process. This may feel like a big, overwhelming process that you're not familiar with, and that is completely okay, and that's why we're here to help. We do this day in and day out, so there are really no silly questions or dumb questions at all. If you have any questions along the way, please feel free to reach out to us, and we would be happy to help. Looking at the mortgage process as a whole, first you're going to submit your application for pre-approval and obtain a pre-approval letter. Once you make an offer on a home and your offer has been accepted, you'll work with your realtor to draft a contract outlining the details of the purchase, which will be signed by both you and the sellers of the home. That contract is then submitted to us, and from there, we place orders for your appraisal and title search. As this is happening, you may have inspections being completed on the home that are outlined in the contract. Once both the appraisal and title search come back and everything looks good, it's time to schedule closing. At that time, you'll work on finalizing your homeowner's insurance with the company of your choosing, and then closing takes place. At closing, you'll sign all your legal documents and you officially become homeowners. Many times we recommend starting with a pre-qualification when you're in the beginning stages of purchasing a home. This is a time where we can sit down, talk about your credit, income, and do some budgeting to see how much you may be able to afford in a home. We'll talk about down payment requirements and those sort of things to see if you're ready for home ownership or what steps you can take to get yourself ready in the future. We'll also be able to run a lot of payment estimates to determine what a monthly payment look like based on a certain purchase price. We can also run it the other way around, for example, like if you tell me the amount you're comfortable paying on a monthly basis for your mortgage, I can use that to tell you the loan amount that might be within your budget. So the next step in the process is going to be your pre-approval application, which most members complete either in person or online. At this point, we'll conduct a hard credit pull, and you'll provide us with supporting documentation, including pay stubs, W-2s, tax returns, and bank statements showing you have the funds available for your down payment and closing costs. We have the availability for you to securely email all these documents over, or you can upload them directly to your application. You don't have to come in and drop off hard copies by any means, but if you prefer that, that is perfectly fine. You can always do an in-person drop-off at any of our branches here in Athens or Logan. Once your application has been submitted, we'll have you sign a packet of initial disclosures, which provide information on the loan you applied for. Your disclosures don't lock you into anything at all. Mortgage regulation just requires that we have these signed within 3 days of application. We have electronic signing available for these disclosures, or you can stop into any of our branches to sign these in person. Once your application has been submitted, your supporting documentation has been provided, and your initial disclosures are signed, we then send your file to our underwriting team so they can review for pre-approval. We can typically issue a pre-approval letter within 3 days of obtaining the necessary documentation and disclosures. During the underwriting process, we'll conduct what's called an upfront underwrite, which is why we gather so much documentation upfront, so we have a great understanding of where you stand for that approval and limit any surprises down the line. Your pre-approval letter provides you with an amount that you're eligible for based on the details provided on your application. Your pre-approval is good for 120 days and is subject to no changes to the application information. So changing jobs, going self-employed, spending all your down payment money, taking out credit cards, maxing out credit cards, those are all things that could definitely negatively impact your pre-approval. Once you apply, we want everything on your credit profile to stay the same. It's good to start the pre-approval process when you want to start shopping around and touring homes, as a lot of realtors require a pre-approval letter prior to showing properties. Also, having a pre-approval letter really strengthens your offer when you want to place an offer on a home. From a seller's standpoint, they would likely accept an offer from someone who is already pre-approved versus someone who isn't. Once you have that pre-approval letter and you've toured a home that you absolutely love, you can then put an offer in on the home with your realtor. If your offer is accepted by the seller, your realtor will then draft a purchase contract. The contract is going to determine the purchase price of the home, any inspections that you're requiring as a contingency, if the sellers are going to be accrediting you anything toward closing costs, and all those different things. The contract will list all the property details that are part of the sale, including the address and parcel numbers, and it will also list your official close date and when you can occupy the property. The contract must be signed by both you and the seller of the property. Once you're under contract, we do ask that you send the contract to us so we can get your application updated according to the details of the purchase contract. Once your application has been updated, we reach out to you to confirm all the details and have you sign a packet of updated disclosures, agreeing to the changes to the application and allowing us to proceed with your loan. Once we have your contract and you've signed your updated disclosures, that's when the process really starts to get fun. If you've had any required inspections marked on your purchase contract, you'll be working with your realtor to get these inspections done. The most common inspections we see are pest, septic, gas line, things like that. We'll require a copy of the completed and past inspection reports, along with the receipts showing the inspections were paid for. The only inspection we do not require is the general home inspection. Again, OUCU does not require inspections be done, but we do require copies of the inspection reports if the inspections are required on the purchase contract. While your inspections are going on, we will also be ordering your appraisal and title services, which are typically ordered at the same time. The appraisal fee is one of the only fees we request up front at the time we order the appraisal. Typically, the fee is around $725, but is subject to change based on price changes and the location of the property. If you do not have an OUCU account, we would have a member service representative reach out to you to open an account at this time, so we can pull the appraisal fee from that account. All other closing costs are paid at the end of the process when closing takes place. The appraisal is requested by OUCU to determine the market value to ensure the home is worth the price you're paying. So this is really important because we don't ever want our members to be overpaying for a property. If the appraised value comes back for more than the purchase price, then that's great, and that means you have some equity from the start. If the appraisal comes back for less, then that gives you a reason to go back to your realtor to do some price negotiation with the sellers if necessary. OUCU takes care of ordering the appraisal for you, so you don't have to worry about finding your own appraiser to do this. A title search is also requested by OUCU from a title company to ensure the seller's legal ability to sell the home. So they're going to be checking for any encumbrances and voluntary liens, such as tax liens or judgments. The seller is obligated to transfer the title clear and unencumbered, so that's why the title search is going to be coming in, to make sure that whenever you inherit this property, it's free and clear and you're good to go. The title company that conducts your title search is typically the same place that you will go for the closing itself. Once you're under contract, you should also be starting to shop around for your homeowner's insurance so you can finalize the policy when a closing date is determined. All borrowers must be listed on the policy, and your dwelling coverage on your insurance must be at least your loan amount. The agent that you're working with on this policy will need to provide OUCU with the finalized insurance policy prior to closing. OUCU does require that a full year's insurance premium be paid prior to closing. You can either pay this separately and provide us with a receipt showing the premium was paid, or we can collect an invoice from your insurance company and collect it at closing with all your other closing costs. By the way, by no means do you have to remember all of this information. These are just all things that we will go over with you as we go through the process. We will take everything step by step and communicate with you along the way whenever we need you to do anything at all. All right, so you've got a closing date, you've finalized your homeowner's insurance, and now it's time to close. Closing is completed in person at the title company that completed your title search. You'll want to make sure that you take your photo ID with you because they'll be verifying that you are who you say you are before you sign off on all of those legal documents. And at the very end of this process, you are officially homeowners. All right, so now that we've walked through how the mortgage process flows, let's go over the qualifications to get a home loan with OUCU. The first thing is going to be your credit score. Your credit score is a 3-digit number that we use in order to predict the risk of serious default. These can range from 300 on the lower end all the way up to 850 on the excellent end. You might be asking, why is credit so important? Your credit score is going to affect your loan approval, and it's also going to translate how much of a down payment we're going to require of you. With a credit score of 660 or higher, we can look at a down payment of as little as 5%. If your credit happens to fall below 660, then a 20% down payment will likely be required. OUCU even has a first-time homebuyers program where we can do down payments of as little as 3%, but we would require a credit score of 700 or higher to qualify for this promotion. So if we take a look at the example on the slide, it just goes to show how much your credit score can affect the amount you're required to put down. Someone who is purchasing a $100,000 home may need to put down $20,000 if the credit is below that 660 threshold. With credit above 660, we could do as little as 5% down at $5,000, which is such a huge difference. Please keep in mind that your down payment does not include closing costs. Closing costs will need to be paid out of pocket at closing along with your down payment. So we're going to be taking a look at your credit score, but we'll also be looking at your credit history. Most borrowers are going to need a minimum of 3 credit references, each with a 2-year history. Credit references are the accounts that are listed on your credit report. For example, if you have a student loan, an auto loan, and a credit card, that would be 3 credit references. We want to see that you can keep 3 accounts on your credit in good standing for at least 2 years when looking for approval. If you don't have these credit references and 2 years of history, we may have other options for you, such as non-traditional credit, but we can talk about that on an individual basis should we come to that. Please keep in mind that utility bills, cell phone bills, insurance, and things like that typically do not report to your credit. So these would not count as a credit reference. If you're in the early stages of planning for homeownership and you don't have these credit references, please reach out to us and we can connect you to our peers who can discuss opening a credit card, a line of credit, or something similar to establish more credit history and get better prepared for your future mortgage application. While we're reviewing your loan for pre-approval, we're also going to be calculating your debt to income ratio. This ratio is used to measure an individual's ability to manage your monthly payment and repay your current debts. Your debt to income ratio is calculated by taking your current monthly debt payments and dividing it by your current gross monthly income. So this is the income before taxes and insurance are deducted. The payments that we'll be including in your debt to income ratio are things that derive from your credit report. So things like car loans, credit cards, student loans, things like that. We also need to factor in your new mortgage payment in that calculation, along with an estimate of your property taxes and homeowners insurance on the new home. Next, we're going to go on to an example just to kind of give you an idea of how we calculate debt to income. We're going to be taking your minimum payments on all your monthly debt, so let's just say $1,500, and dividing that by your gross monthly income of $4,000 in this example. This is going to give us a 37.5% debt to income ratio. The maximum debt to income ratio that we can typically approve is 43%. And again, this includes all your current debts plus your new projected mortgage payment with property taxes and homeowners insurance included. As your mortgage originator, it's really not my job to make you house poor. We want to make sure that you can have the ability to live life outside of your four walls. So that's why during the pre-qualification process, one of the main things that we ask in our very initial conversation is going to be, what do you feel comfortable paying on a monthly basis? And we will build off of that. So let's take a bit to break down your housing payment and what all goes into that. Your principal and interest is the mortgage payment itself and what goes into paying the loan down. If you have a down payment of less than 20% of the purchase price, you'll be required to pay private mortgage insurance, or PMI, on top of the principal and interest. So you would pay this to OUCU as part of your home loan. If you have at least a 20% down payment, you will not be subject to paying PMI. Homeowners insurance and property taxes are not included with your mortgage payment at OUCU because OUCU does not escrow. When you close on your home and start making payments, you will have already paid your first year's premium of homeowners insurance at closing. After that, you can work with your insurance company directly to set up a payment plan through them. Property taxes are typically paid twice per year, but I do believe that Athens County has a program that you can enroll in to pay your property taxes monthly if you wish. You would just need to contact the treasurer's office to get this set up. The next portion we're going to discuss is your down payment. The higher your down payment means the lower your mortgage payment will be because it's going to lower the loan amount that you need to purchase the home. Your down payment is due at closing with the rest of your closing costs and given to the title company that you close with. So let's go over what our requirements are for that down payment. Like we discussed, we have a 5% down payment minimum for most buyers with credit at 660 or higher, along with a 3% down payment option for our first-time home buyers with a credit score of at least 700. So that is a great option for our first-time home buyers and makes home ownership definitely attainable. If you don't have the required down payment and closing costs readily available at the time of your application, we can also take a look at different assets such as gifted funds. So if your mom or dad or relative is wanting to gift you some of the funds to help with this big purchase, that's something we can definitely look at. We can also look at using secured funds for your down payment. So for example, if you own a vehicle or something free and clear, you could take a loan out against that vehicle and use those funds for your down payment. We would just have to make sure that the additional payment on the new loan can fit into your debt to income ratio and still allow you to be approved for the home loan. Unfortunately, we do not have any 0% down payment options, so 3% is going to be our absolute minimum for first-time home buyers and 5% for all other buyers. If you're using a checking or savings account for your down payment, we will need to collect bank statements showing that you've had these funds in your account for at least 2 months prior to application. So for example, if you apply today, we would collect your January and February bank statements to show you have enough money for the down payment and closing costs. When looking at your bank statements, we'll also be checking for any large deposits. Any large deposits must be verified and sourced, so just keep that in mind. For example, if you have a large transfer from another financial institution to your OUCU account, we would likely require you to provide the statement from your other bank account showing the transfer leaving the account. As another example, if you sold a car and had a cash or check deposit that you're wishing to use for your down payment, we would likely require that you provide us with the bill of sale verifying the deposit was from the sale of a car. These are just all things to keep in mind as you plan and save for your down payment. It's definitely wise to keep a paper trail for any of those transactions that you're doing prior to applying. Private mortgage insurance has been mentioned a few times already. It's often referred to as PMI. Like we talked about before, PMI is required on all purchases with less than a 20% down payment. It is a protection for the lender and allows you to obtain homeownership with less money down. This allows for a smaller down payment if you qualify as a first-time home buyer and want to do as little as 3% down, or in other situations as little as 5% down if you choose. PMI is paid with your monthly mortgage payment, so you don't even have to think about it. You may be asking yourself if you have to pay PMI for the entire life of your loan, and the answer is no. At minimum, you need to pay PMI for at least 2 years. Also, once your loan reaches 78% loan to value, OUCU drops your PMI automatically. What this means is that when your loan amount reaches 78% of your home's appraised value or purchase price, this we would then drop the PMI automatically. Depending on the down payment amount, this could take more than 2 years to achieve, but you do have to keep PMI on your loan for at least 2 years. So let's take a look at closing costs and what they are, why they're important, and why they're required. Closing costs are used to cover the cost of all services to legally transfer the property from the seller to the buyer. This also includes transferring the funds from the buyer to the seller. The title company will collect the funds from your loan along with your down payment and closing costs and distribute those funds to the seller, realtors, and any other parties involved in the deal. Closing costs are made up of several items: loan costs, which include the origination and appraisal fees. Legal costs cover the recording of your new mortgage, your deed, and the conveyance of ownership from the seller to you. The title portion covers the title company doing the history search on the property and the settlement fee paid to the closing agent. The total amount of closing costs vary by loan type, loan amount, and credit score. When we do your pre-qualification and run those rough numbers, we can give you a better estimate of what closing costs may look like for you. So let's move on by diving into the different products and types we have available here at OUCU. When people think of a mortgage, the first thing that comes to mind is usually a conventional 30-year fixed rate. While we do offer a 30-year rate, we also offer various terms starting at 10-year all the way up to a 30-year term with fixed rates. Typically, fixed rate financing is best suited for long-term ownership. If you're thinking that your home purchase may be for short-term ownership, then an adjustable rate mortgage may be just right for you. Now, an adjustable rate can sound very scary. However, our adjustable rate mortgage product is offered on any one of our terms and can have lower closing costs, making it a good choice if you don't plan to stay in the home long. The rate is determined by the index for 1 year set by the U.S. Treasury and by our margin set at OUCU. The adjustable rate mortgage that OUCU offers is a 7-1, which means it's a fixed rate for the first 7 years and can adjust annually after that. Adjustment caps are in place to protect you, so it doesn't just adjust randomly. The rate can never adjust more than 2% each year or 6% over the life of the loan. So for example, if your rate at closing is 6%, your rate would never go above 12% for the life of the loan. We do offer construction loans as well, which are offered on our adjustable rate mortgage product. Our construction loans have a one-time close and typically have a 6-month build period with availability to have it extended if needed. A contractor must complete the build. Typically, it's best to meet in person with your mortgage originator because each situation is different. For example, you might already have the land that you're wanting to build on, or you may need to purchase it as part of the transaction, and we have options for both of those situations. So why should you choose OUCU for your home loan? We have a great, easy application process that is available 24/7 online. You never have to wonder where your mortgage is. OUCU retains all servicing rights, so you'll always make your payment to OUCU and call us for any questions that you have. You can also easily make your payments and see your loan details in your online banking. As Callie mentioned at the very beginning, we are the top mortgage lender in Athens County, and most importantly, we care about our members and your ability to become homeowners. OUCU also services the entire state of Ohio. So even if you're not local to Athens, you can still get your mortgage through OUCU as long as the property you're purchasing is within the state of Ohio. Our application system is called Mortgage Click. So here is where you would submit your online application, which can also offer instant approval, and you can print that approval letter for shopping. Through Mortgage Click, you can also view our current rates and calculate estimates of monthly payments and closing costs through the loan consultant tool. If you're ready to make an appointment with us or have any additional questions, you can scan the QR code here. We can do virtual appointments, phone appointments, or we schedule in-person appointments at any of our branches in Athens or Logan. We're typically in office Monday through Friday from 9 to 5, so feel free to contact us if we can help in any way. As part of joining this webinar, we also have a digital coupon for $100 off your closing costs if you close on your home within this calendar year with OUCU.
Wow, Kim, you did a great job. Thank you. And I think if only one thing is crystal clear today, it's the fact that you are in good hands with the OUCU Home Loan team. One of my favorite parts you mentioned in this seminar is the reminder that we service your loans in-house. It doesn't get more local than that. So let's go ahead and open the chat. Again, please select everyone in the chat feature and let me know what questions we have for Kim. I have a question. I can start to kind of get the ball rolling. How many here are first-time home buyers and have asked the question, like, where do I start? Yeah, I see some hands up. Definitely, I've asked that question myself when I was in that position. Kim, what pieces of advice would you give someone looking to purchase a home in the near future?
So first things first is taking a look at your credit. So if you think that you're not quite to that 660 threshold for credit score, I would definitely work on making sure your payments are on time, working on building that credit up to 660 so that way you can qualify for that 5% down on the down payment. Other than that, just keep saving for your down payment and closing costs is what I recommend at this point, because that'll be the main thing that's going to be needed in terms of buying your home, is verifying that you have the down payment and closing costs for the purchase.
Awesome. Thanks, Kim. Brianna, I see you have your hands up. If you're able to unmute and ask your question, we'd love to hear it.
So I just kind of wondered, um, I think my credit's really good. My husband's, it might be a little different compared to mine. How does that kind of impact things?
So if both you and your husband are going to be on the application, we use whoever has the lower credit score to carry the application. So if your credit's above 660, for example, and his is below 660, we would have to use his credit score when determining your down payment requirement. So if you don't have the full 20%, if you worry that credit's below 660, we can always run some estimates with debt to income and things like that to see if maybe you would qualify for the mortgage in just your name, if it's something that you're wanting to do now, or you can just work to try to build his credit up above the 660 threshold or wherever you want to be.
Okay, cool. Thank you.
Great question. Thanks, Brianna. Are there any other questions? This is such a great opportunity to, make to pick Kim's brain and get the answer that you is kind of floating around in your head. Um, and if you don't feel comfortable asking now, absolutely make an appointment. You can schedule an appointment on our website. You can click a link in the follow-up email. We are always available to walk you through the process, and our team is fantastic. Um, So if everyone's had an opportunity to ask their questions, I just want to remind you, like, scan that QR code on the screen or make your appointment. We're excited to work with you. Thank you for your time today, and have a great rest of your day. Thank you.
Thank you so
Thank you
much.
for joining us.